welcome. I am Janita Stanton. We have Reginald Perriman and Shaka Williams, and we are TSARE. This is a There's Something About Real Estate podcast where we talk all things real estate.
What's going on?
Nothing much. I was talking about this sage.
The sage.
Yeah, I've been saging lately. And the other day, I decided to really, I have a really big house.
That's because the house hunted.
Look.
Right.
And I smoked up everything. My hair was smoky. My clothes were smoky. I smell like I'm a smoker.
You a beginner sager?
Huh?
You a beginner stager?
I am a beginner sager.
Oh, okay. You was messing up stuff.
Nah, I just messed up everything was full of smoke. Smell like I smoke Newports for a living.
Oh, that's crazy.
But anyway,
I got some friends that be lighting up. It don't be sage though.
And that's how I smell. So I'm like, how do people walk around like this?
Yeah, they don't know. They be used to it.
Yeah.
It's just in your clothes and in your hair. Whew, I guess more power to y'all.
One of my friends used to stay with me, and he used to smoke like a chimney, right? And I remember having a contact going to the office, and I went on a listing appointment, and it was a husband and wife, and a lady was like, "And here comes the living room," and I was like, "Nah."
You said it out loud?
Yeah, because I was trying not to say it out loud, but it came out, and I was like, "Nah." And I said it all with a jaw, like, "Nah." And then the husband started laughing, and he just thought I was so cool after that.
Right.
Because, he was one of the people to tell his wife, "You know that," that type of thing. And I was like, "Nah." So what's going on? We got some market predictions. We got... You brought up something with Robert Kiyosaki?
Yeah, just an article. People think he's smart. I do too. So
You think he's smart?
Who's smarter? I don't know him. I would like to meet him.
Who's smarter, Robert Kiyosaki or Dave Ramsey?
I don't know.
Robert Kiyosaki. But I think he's smart for a different reason. What he about to say right here, it's smart because he's pushing fear, but I don't think he believe what he's selling.
Oh, okay.
I don't think none of these billionaires that's coming out saying that the market, because you notice,
right,
it's the billionaires that's coming out telling everybody, "Hey man, it's about to be bad as hell out here."
Right.
But why they spending billions of dollars on projects?
Yeah, we're going to talk about that too, because it's a lot of conflict and contradiction in the market and in the media. So tell us what Robert Kiyosaki is saying about 50%.
Says that hot inflation will wipe out 50% of the U.S. population. I don't know what that means, though, what he means and how to protect yourself. And I guess that was my whole thing. When I read it, I'm like, it's going to wipe out 50% of the U.S. population. I need more.
Is he saying it's going to wipe them out like homeless, or wipe them out and they can't afford what they can currently afford? Or
he's saying get rid of, I feel like he's saying get rid of the middle class, which they've been talking about forever.
Yeah,
right?
But the middle class is the working force. Everybody, the corporations need the middle class. Mm-hmm. The housing market need the middle class. Mm-hmm. Because if you only have the low income, then somebody have to subsidize that. And then if you only have the very rich, then they all going to be outbidding each other for the property. So the middle class is there. But, 50% will be wiped out.
Yeah, 50% of what though? It's saying population. In my mind, I'm reading this, and I know we're naming this the sky is falling. I'm okay, what I need to be watching out for. I feel like I'm about to die is what it makes me feel like, honestly. So I'm wondering what does this make other people feel like when they read this?
It sounds like a zombie apocalypse movie or something. 50%
That's what it sounds
of the
like.
population gonna get wiped out.
That's why I said he's smart, because he knew how to grab your attention.
Right.
But yeah, I think what he's talking about is, Reg, you're right. But he's saying, middle class, the working class, used to be able to go on trips, live in a decent area. You can probably send your kids to private schools if you wanted to.
Right.
Drive certain cars. And he's saying, I feel like he's saying that's going to go away with inflation, because, the first thing that's going to go away is trips, probably.
Right.
But you're going to start, people, they're going more, instead of to private schools, they're going to charter schools because, they're free.
Right.
They're just certain luxuries that that people that were considered middle class can't afford anymore. So now they're inching down towards the lower income, the people that weren't able to do that anyway.
Or will the products and services adjust to that middle class income?
So that's what
now,
the inflation
because inflation will have to correct itself. Because if I'm if I'm what middle class car, if I'm selling Tahoes, right, at X amount of dollars, and right now the middle class can afford them, and that's a large percentage of my consumer, and the people in the higher class are not necessarily buying this vehicle. When the middle class starts pulling back, the next model of Tahoe needs to be affordable for the middle class, right? So at some point in time, the market will always correct itself to serve whatever market niche it is. So the producers in the market, the manufacturers, or the people providing services have to look at their market, because if you say the middle class is losing to inflation, then I have to readjust my products and services because I still need that base.
Well, that's what the government is hoping. And so the issue is when that happens, and does that happen prior to that's why we're getting ready to go into a recession.
Right.
Basically, that's not happening. We're having both happen at the same time. Typically, increased interest rates will make people not be able to afford those, like what you just said, those additional luxuries. And then,
or do prices come down when rates go up?
That's what's supposed to happen. That's why the feds are increasing interest rates right now.
But prices are still going up.
But they're still staying up. You know what I mean? They're not going back down. So that's why we have a recession getting ready to happen. So yes, eventually something's got to happen. So either one of the two. Either the government is going to have to go back down on their interest rates, or like you said, people that are selling goods and services are going to have to adjust their price. It's a matter of who breaks first. So we like the middle class is like in between a war between the government, which is, like you said, subsidizing the lower income, and then the very rich, right? And we in the middle of the fight. Or anybody that's not very rich and that's not low income is just sitting here waiting to see who gonna win the battle. Is the government gonna break first and go back down on interest rates? Or is the people with the goods and services going to start dropping their prices? We're not seeing that happen right now.
Interest rates dropped like a point over the last week.
Yeah, but we're talking about long term. Long term.
So we all know, because a lot of projections, people have been saying in the first quarter, we're going to get back down to the 4s.
I've been hearing the opposite. I've been hearing it's going to go up to the damn near 10.
I think the people that get hurt the most when the market is shifting, and I don't care what industry it is, I don't care, it's the people that are just completely unaware of what's going on and not managing their money and their finances. Because it's one thing, now you can't control if you all of a sudden get laid off, you lose your job, and maybe you don't have enough savings, and you go back out in the workforce and there's no jobs equal or higher pay, right? That's something you can't control. But some people's spending is just out of control, and they're trying to keep up with, okay, I got to keep the newest model car. Well, the cars increased by the prices of vehicles increased, say, 10% or 20%, and now you're trying to continuously step up. Well, maybe you don't buy a Tahoe next time. Maybe you buy the vehicle just below that, so it's still affordable. And those are the people that get caught, because you're in this cycle of trying to maintain
your lifestyle.
Well, not just the lifestyle, but the material appearance of that lifestyle, right? Instead of saying, okay, this is my budget, this is what I can afford. I don't have to look like I'm middle or upper middle class, but my pockets say I'm upper middle class.
But that's the point, though. So I'm sorry, Johnny. That's the point, though, is with the interest rates increasing.
Right.
So now the cost of living to buy a house or to live, whether you're renting or buying, has increased. The cost to lease or buy a car has increased.
Right.
Gas is increased. Food has increased. You get what I'm saying?
Or
so
do you just adjust? So maybe you wanted to buy
exactly. Now you got to adjust down though. That's the point. You're adjusting down. So you can't do what you used to do. Your lifestyle has changed and actually been relegated to being you basically living like you low income.
So if I was buying in Farmington, right? Last year, for whatever reason, I didn't buy in Farmington. Now I can't afford to move to Farmington because prices went up, interest rates went up. And I go to a different area that's not on, so you talking A level, B level. So maybe I go to a B level area, right? If I'm not the only person that has to do that. So if we all go into the B level area, now that becomes the new Farmington.
Yeah, that's how you get rid of the middle class. Yeah, you're describing exactly what he's talking about.
Right,
yes,
but you didn't get rid of us. We're just here now instead of here.
All of this, none of this is about like investments. This is all like the cost of living plus like entertainment expense. It's stuff that's not gonna produce a return. Cars, eating, clothing, like none of this stuff is going to produce a return. So yeah, we may have to cut back on those things. But I feel like one of the things that they're highlighting is, all right, we need to think about where we are investing the money. So one of the things in the article they talked about is like, okay, people who pay into a pension, that's great. I mean, not a pension, that went away, but the 401ks.
Right.
So if I'm spending my money there and then stocks are heavily decreasing, now I no longer have a retirement because I'm paying into this 401k where my stocks are decreasing. So in order for 50% of the U.S. population not to be wiped out, maybe we need to start paying attention to where we're putting our money in terms of the investment vehicle.
That's why I said
you don't have investment money. So if all those things increase, all right. So look, if your cost just to exist, we just said everything. I'm talking about to live. So everybody agrees. So the first thing you got to have is food, right?
Right.
That increase.
Right.
Next thing you got to have after food is it's going to be arguable between housing and the car, right? I always ask that question, which I think
depends on what city you live.
You say a car?
It depends on what city you live in.
So as long as I'm in Michigan, it's going to be a car.
All right, okay.
Because some cities, people don't even have
public transportation.
Cars.
Yeah. Yep. So, but those things are still needs,
food
right?
And shelter.
Food, shelter, and
clothing.
And then clothing. All that increase. So now guess what's going to happen when that increase? First of all, you was barely able to contribute to your 401k, right? So that's that's gone. That's a luxury.
I'm buying cheaper.
I know that. I mean,
but those contributions are before anything is taken out. So why would it? The only reason why that's gone to me is because it's not reliable right now.
No, it's gone because you can't afford to. So you have to pay money into that to get that. So if you don't, that's your additional money after you. So let's say if you don't
have enough money left over to even put into invest in that type of thing.
Yeah, that's not even. That don't even exist.
Go from investing 20% before taxes to investing 10 or 12% before taxes.
You can't because so if you look at the cost of living and how that's increased, you don't have it no more. It's not there. You don't have any, you was barely able to contribute before. Now, with the cost of living increasing, you don't have any additional money to contribute to your mutual fund.
I thought the wages were increasing because they couldn't get people to work.
No, so the wages are increasing. So that's another fight. So we'll be fighting about something else different.
So it sounds like there's a time period where inflation is outpacing wages, and the wages have to catch up to inflation.
And we're there now
to correct that.
Yes.
Right. But it still goes back to people being aware. So if you're living check to check and you don't have enough money to invest or put away for even savings, right? Then these increases before your wages increase are going to wipe you out, like what the article says, right? Because if I was paying, $1,500, now it's $1,700, and I was already check to check.
But how many pair of J's did you buy
We're not talking about the people. We're not talking about the people that bought the J's.
We're talking about. I'm specifically commenting because he just said something in particular.
Yeah, but so those people that's middle class that he's talking about, those aren't. So those people with that mindset that you're talking about are normally going to be lower income.
I thought we were talking about all of it. So
we are.
He just said something about it went from 1,500 to 1,700. So my question is not necessarily about the J's. It could be J's, Alexander, the trip that you're getting ready to take. It could be the shirt that Robbie Kiyosaki decided to spend his money on. So what my question is, why aren't people pulling back on some of the spending?
We just said. So if you hear what I just said, you can't bring an outlier in. So everybody is not ignorant with their money. So, and a lot of middle class people are not. You know what I'm saying? Like we can't keep pushing the narrative that the only reason this has happened is because they're frivolous with their spending. That's not necessarily the case.
Right. You said we're pushing the agenda that people are that what's happening.
The narrative that
what's happening.
So what I just said is we can't bring in the fact. So let's take away frivolous spending.
Let's just look at people living check to check and they're just paying their basic needs, and they're just making enough to get by.
Yes.
The reality of it is, if you was paying $1,500 and your rent increased to $1,700 and you can no longer afford it, you need to go find somewhere else that you can afford.
So now you're going to go back to...
That pushes you down to a different area, but everybody else that's in your same situation is coming down with you, which means that area is going to eventually look like the area you was in because you brought all the people with the... You see what I'm saying?
I do, but that's not a quick fix. So, for example, there's a difference
between... It's
not
a quick fix, but that's what happens in the market.
So when you're talking about this, what are these people that's going to move? You're talking about people that are purchasing right now or people that are renting?
Renting, both. So you look at, let's take Detroit, for example, right? The people that couldn't afford Boston Edison, they went to the North End, right? Or the surrounding areas. Now look at those areas, right? Those people that were there, they got priced out of one area, so they all went to another area, and now that area values is high. New people trying to come in can't afford it, so now they got to go to the next surrounding area. But that migration of people that got priced out went to another area. Now that area has come up to a standard of what those people were used to when they were staying in the Boston Edison.
So that's what I'm saying. So are we actually talking about a price? Because in every situation, it's not because they was priced out of it. It may have been because they wanted to have equity.
Yeah, that too.
Yeah, that person did it on purpose. They wanted. They chose that.
But that's all part of it being affordable, right? A good investment decision, and it's affordable. So I couldn't afford to do that in Boston Edison based on my income. So I have to do the next best thing. But the same way I'm thinking, there's tons of other people that's in my same income bracket that are going to make the same decision. And now this area became what the other area would have been if we would have all been able to move there.
So my rebuttal.
Now it may not be the same quality of house,
or
but
living.
the area it becomes the same.
So you use Farmington because it's a good one, right?
Right.
Farmington. So you used to be able to afford. So when people move to Farmington, they're typically coming from where? When they us.
From Detroit, from Southfield, and they moved
Oak Park,
right.
So they felt like, boom, they went to Farmington. We went to Farmington because you got supposedly a better quality of living, right?
Right.
Better schools, safer, lower insurance rates, all those type of things, right?
Right.
Now, that's what made you middle class.
Right.
Right. Now you're going back down. So all right, now Farmington has increased. So now I can't live in Farmington. So I got to go back to Southfield or Oak Park or back to Detroit,
right?
Which is not as safe. Which is schools are not as good.
Right.
So basically, your lifestyle has changed drastically. I hear what you're saying. Like maybe, how long do you think it's going to take for them to change around the city of Detroit?
So let me you using that example. Let me give you another example, right? So we all know what Royal Oak was 15, 20 years ago, right? Royal Oak started coming along, and then all of a sudden, bam, like I can't afford to even touch Royal Oak. I'm talking about for a person in a certain income range, right? It just became unaffordable. So they said, oh, I'll go to Ferndale. And then Ferndale started attracting all the same people in that same income class that who could no longer afford Royal Oak.
Mm-hmm.
So now Ferndale is affordable to those people, but then the new people coming in because inflation, Ferndale's overpriced. The new people coming in making that same income can't go to Ferndale. So guess what they start doing? They start going to Hazel Park. But the point I'm making is, look what Ferndale is now compared to what it was before the people in this income range came in. Look what Hazel Park is now. So all you did was, okay, we can't afford to go there. We're going to go here. And it ended up being somewhere where people in this income range could afford. And it changed the dynamic.
You just started a different way, but it's the same thing happened. So yeah, the people that were in Royal Oak got pushed down.
Right.
The people in Ferndale got pushed down. Then the people to Hazel Park, and the people in Hazel Park got pushed down. You get what I'm saying? And
but what I'm
cycle.
saying is, it changed Hazel Park, it changed Ferndale, and eventually every market will catch up and adapt to the people that can afford to be there.
So, how do these? So I'm trying to figure out how this conversation is impactful in terms of, and what's going on with inflation and that wiping out 50% of the population.
Because you're not wiping them out, you're just putting them in. Your everything will adjust so that it may feel like people are being wiped out. So okay, 30% of the people can't afford to take a cruise anymore. The cruise ships say we lost 30% of the business. What can we do so people can afford to go on cruises? We change our price. We change our cost. They may have to cut services so that these people can afford it. It's just going to be a temporary shift before the market corrects itself, because we still need that middle class to be able to do what they were used to doing. It's just at a lower cost.
Because you want to respond to what he just said, right? So you just said, so they're going to cut their price. When they cut their cost, or their price, they're going to cut the amenities that you get for that service.
Right.
You know what I mean? Like, it's just like when we go to these restaurants right now and our service sucks. You know what I mean? Not because they necessarily have bad service, because they can't afford to employ all the additional people that they had, all the additional servers and things that they had. So you lost a quality. You know what I'm saying? There's a quality of life that's lost there. Rich people are still going to enjoy theirs. Middle class people are losing their quality of life in every facet, no matter how you slice it.
Their
quality of life
is what I'm saying.
Yes, it is. Your quality of life is getting wiped out. It's going away. So listen, middle class. We just in this situation here.
But eventually, wages will have to increase.
That's hopeful thinking. We hope that it does.
No, it always does. It always does.
No, it has not. Listen,
it always catches up at some point in time.
So you went from being able to put money in your 401k for retirement. Now you cannot anymore because you can't afford it. Then you went. Let's go. Let's say vacations first. So vacations are gone. Quality schooling is gone. 401k and the retirement is gone.
Right.
That's wiping out. That's wiping you out. That's getting rid of the middle class. That's pushing you back down.
Everything adjusts at some point in time.
So how do you adjust?
But we're talking about
because
not being able to contribute to these areas, and this is talking about, I think, something different, because he's saying that you can't put the money in the 401k. Is that the 401k is not going to continue to produce an income.
But you can't put it there anyway. Don't matter. Right. You ain't got no money to put towards it.
So what Shaka is saying is the person living check to check that never had money to go in there. You saying people that can afford to put money in their retirement accounts suck, and they're going to lose a portion of their retirement savings or retirement investments or whatever. That's going to wipe them out as well.
My question through all of these conversations have been, well, what are you going to do if, you're saying real estate sucks, and now you're saying the stock market sucks.
It don't suck.
None of this, we're not going to be able to.
She's saying that's what
we're not going to be able to yield a return or have any type of quality of living in these areas. So my question is, well, what do you do then?
Mm-hmm.
I think so. You can't say real estate and the stock market suck if they're still investing in it, right? Because most of the people that are telling you that are telling you that, but they still invest in it.
Exactly.
It may suck at the time. Like when stocks go down, people, if it's a good value stock and the stock price go down, people buy more of it, right?
Right.
It's all about knowing when it's timing, it's decision making, and it's understanding finances.
And it's decision making, and that's why I brought up the. So yes, sorry, it's not. It's a funny comment. It's an environment in which I'm privy to. We like to spend money on things that are not necessary. So when you say decision making as being a part of it, that means that some of those we're going to cut back on some of those things.
All of us don't like to spend our money on that, and so that goes back to what y'all just saying. We're not talking about people living check to check. We're talking about people who had the excess money to be able to contribute to their 401ks and their mutual funds and investing. Period.
Right.
They don't have that money available anymore. Period.
Yeah,
it don't matter if the market if it's suck or not. They don't even have it available to them to. It don't matter if you have another vehicle for them to put it in because they don't have the money to be able to put it in there. But now we're being
contradictory because we just said that we're still eating, we're still shopping, we're still traveling.
We did not.
We did.
No, we did not. We just talked about the necessities for you to live: food, water, clothing, housing, gas in your car. We ain't even got to vacationing or anything. That's been gone. You know what I'm saying? So we talking about people when they pay for those items right there, which is what the basic needs for everybody, I think. Then once you pay for your basic needs, you have no additional money to do anything, let alone invest.
So
you know what I'm saying? Investing was so the way that those people here. This is the best way I can say it. The way that those people were able, that had the money to be able to invest, is because they were doing the right thing. That's why they were able to put their money in 401ks and invest in real estate. Now they don't. It don't matter if they're doing the right thing because they don't have the additional money to be able to do that because inflation has taken all of it.
But at some point in time, in order for employers to keep good workers, they're going to have to raise wages to keep up with the cost of living. So it will adjust and get people back into where they can. If people are used to doing a certain thing or living a certain lifestyle, they're going to demand that their employers increase wages or they're going to look for other employment.
Increased wages is not the answer, though. Increased wages only. So, okay. So let me tell you. I'm going to tell you how increased wages.
There's a time where it's offset, it's off balance. Inflation creeps up, wages don't keep up with inflation. Then there's a period of time where wages increase, people can do more, they spend more, and that triggers the economy and the prices start going up.
There
when
you
people
go.
have excess money.
No, not excess money. I'm talking about with the increased wages.
Yeah, but the market is always going to get triggered for everything to increase. That's why we have inflation, right?
No.
The reason things increase is because there's always periods and moments where people have excess money to spend and they go out and spend it. We've seen it in the housing market when people were paying $10,000 and $15,000 over asking price.
That's totally different, though.
No, but it's still an example. That pushed pricing up. It made the market more competitive. Now we're at a point where people everybody can't afford to do that now, right? So we're seeing housing prices not appreciate at the rate that they were. So the people that couldn't fight that fight and compete then, they're able to compete now, and their income hasn't changed.
But they're not able to compete because they're still spending the same amount for housing. They may be getting less house. So they're not. That doesn't change that. Now, when you were saying increasing wages, right? So I'm a small business owner, right?
Right.
So if I have to increase my wages for my employees,
right?
So now I got to, in order to keep my profit margin, what I got to do? I got to increase what it costs me to go give you your good or your service,
right?
Right. So that's not a fix. That's not how you fix it. So,
but there's still a time. There's still a time period when your employees. Let's say your employee is paying $1,500 a month for rent, right? And their rent goes up to $1,700. You're not immediately increasing their wages, right?
Oh, that happened first. So
No,
remember, wage increase happened before all this
wait,
stuff
no,
happened.
I'm just saying their rent goes up according to their lease agreement to $1,700, right? You're not immediately increasing that wage, right? But somehow that employee figures it out. They manage their budget. They rearrange.
Well, they take away from their excess money that they were investing in.
So they can still afford it, right? But at some point in time, that employee is going to say, man, I really like the lifestyle I had. They're either going to come to you for a raise or they're going to try to find employment elsewhere where they can make more money. Now, whichever one happened, they got more money now coming in income-wise, right? Now they can afford the lifestyle that they were used to, and they have it. Then, boom, other people are doing the same thing, but some people got excess money. Now, all of a sudden, the next year, rent goes up to $1,900. The cycle repeats itself, but for a period of time, they were able to live the lifestyle again that they wanted.
That's not what happens. So your cycle is off because, so when you increase the wage, right, I had to increase my price. Look, I had to increase my price. This is a fact, though. Increase my price. When I increase my price, what happened? What you're supposed to do, right? You're supposed to stop. You're going to stop buying that good or service, right?
Right.
So now that person, that small business owner, is going to what's going to happen to them?
They got to increase.
No, they're going to go out of business. They're out of business. And when they go out of business, the individual who just got the rate increase, the wage increase, doesn't have a job. And the person who was, the other people who were getting the wage increases don't have jobs. And the person who owned the business doesn't have money and is not employing people anymore.
Right.
That's not the fix.
But
you know what I'm saying? The fix is that's not the fix. Go ahead. What you was going to say?
That's the downside. But
that's what happens.
You got the small business. You got the big corporation. It's all one big puzzle. And inflation happens. Wages increase. Then wages increase. And people can afford things again. Then inflation happens. It's just
let me tell you,
keeps going.
So just understand this. So the big businesses are so just understanding why we have inflation, right? So we got inflation. Why? Because the big businesses weren't making their profit margin, right? Billionaires selling whatever they were selling weren't making a profit margin. Why were they not making a profit margin?
But inflation also increased because of demand and people willing to spend money on certain
But that's
things.
not what happened in this case, and we know that for a fact.
No, but
the demand is there. The demand to buy houses was there. The demand to buy every good and service out there was here. We got high demand.
And it caused things to go up.
No, that's not what caused things to go up. What caused things? That's what
high demand don't cause
the housing price.
No, not so. I did not say that.
Okay.
We said in this instance here. Listen to what I'm saying. Y'all hear what I'm saying? So y'all have to hear me instead of trying to argue. So
see what Robert Kiyosaki started.
But you can't understand if you're talking. But I'm trying to explain it. But you're still talking right now.
I wasn't.
She's not talking. The fuck is you doing there? If you're not talking, you're talking.
Oh boy.
So listen.
Right.
So what I'm trying to explain is you can't say you're not talking while you talking.
I wasn't.
But you still talking.
I just asked a question.
Bruh.
That's what we're doing on the podcast. Ask a question.
But I'm trying to talk right now, and you're continuing to cut me off. Thank you. So the point is, the big corporation, all they're trying to do, and what he's explaining, is get rid of all these people that y'all saying just got created, all these middle class or small business owners that were just created that are taken away from their profit margin because they found their piece of the pie. They want to get rid of their ass. They don't want that. You know what I'm saying? So what do? They have to suppress that. And I just explained to you how. Right. Yes, wage increase is going to have to happen. When wage increase happens, small businesses are going to go out of business. And now guess what you have to be now? An employee. You got to go work a job for one of the big people. Now you're no longer middle class anymore because...
But somebody's always going to find a way to become an entrepreneur and start a business.
I mean, I'm always going to... Look, yes.
Right.
It's you got
the minute one person business closed because they couldn't adapt to the change, a new person is coming into the market with something new, with a whole different strategy. It's always going to be a middle class because our economy is based on the middle class.
Yeah, so I can't wait to see the next. So we've been seeing it slowly but surely deteriorate. We've been seeing it go away already.
They've been saying it's always a middle class. It's always going to adjust to allow the middle class to have a middle class lifestyle, and that's usually going to be the people that's living check to check and they hoping for retirement to be all right. That's your middle class. That's your middle.
So what is
then your upper middle class? I think we're upper middle class.
Oh, okay. But we ain't rich though. So we're not rich, and we're not lower income. So we are still middle class.
Upper middle class, yeah.
Okay.
Well, that's what I can say. I don't know what you make.
Yeah. Well, in these. We are middle class, whatever you want to call it, upper or lower. We're in the middle class,
upper middle class.
It's low. So it's low income. It's middle class. And it's rich.
Google what middle class is. Median income for American households. Mm-hmm. We are definitely upper middle class.
Okay.
I don't consider myself rich because my idea of rich is something different.
Yeah.
So. There you go.
That's what is that?
Oh, wait, that's middle class, right?
That's middle class, Dean?
That's middle class.
Upper.
That's upper.
Oh, 52,000
I might be rich.
You're right.
I might be rich there.
Oh no, you know what? We talked about this before. We talked about the 250 and that's in the top 1% or whatever.
That's
right. Yes. Yeah.
I don't feel rich. I feel like But I just know some people that make a lot more money than me, and I don't feel I call them rich.
But I know other people that make a little bit less than us, and those people are like feeling it, and they're not feeling it because they're frivolously spending their money. They're feeling it because their cost of living has increased so drastically that it's impacting them.
But eventually, wages will. How you think we got the wages we got? The wages had to eventually catch up. The people you're talking about that's feeling it, they wasn't feeling it 3 years ago, right?
They weren't feeling it 2 years ago, probably. But yeah, 3 years ago, they probably was still feeling it.
But at some point in time in the past 20 years, somebody that's in their same income level or position or whatever class they were went through this cycle where they were good, they were feeling it. Then they were good, then they were feeling it. That's just a middle class train that's going to happen.
Who voted for the wage increases?
The people that wanted more money.
Yeah, the people that work jobs.
Right.
Which is the majority of the people on the planet, right? So, that's going to pass, but that doesn't mean that that's the fix.
I'm not saying it's never going to be fixed. It's not meant to be fixed. It's meant to be a cycle.
I agree with that.
When candy bars were $0.25, now they're $1.50 or however much they cost.
Right.
That only happened because people were buying candy bars at 25 cents, and eventually they had to start selling them at 50 cents, and people could afford to buy them at 50 cents, and then eventually they went up to $1, so on and so forth. Prices are going to go up. Wages are going to go up. That's just the way America is set up. But on the other note, because Robert Kiyosaki took too much of our time with his clickbait.
Right.
So we talking doom and gloom, but somebody just invested $1.5 billion in Detroit for housing, retail, and offices and 2 hotels.
Lies.
And Janito, can you talk about that a little bit?
I got permission.
You raised your hand.
Petty
you had
Smith.
the church finger.
Oh.
Yeah, you can talk when it's not in the middle of somebody else making a point.
You said don't talk when grown folks are talking.
Let me see when I can
It's
see.
just rude. That's
God,
all. Can't get your point across.
Oh, boy. All right, $1.5 billion.
All right. Yeah. So the reason why I presented this article in particular is because there's been all this conversation about like where to invest or stop buying in Detroit. And so when I see something like this came out November 15th. So it's an update from, I believe, like Tuesday, that these projects that were underway are coming into fruition. So, $1.1 billion development plan near like Woodward's Little Caesar Arena area. It's supposed to be jobs that are going to be created, temporary jobs that are going to be created. And so I'm wondering, why would I not buy right now? close to these areas?
Because you can't, because it's too high to buy.
I mean, there's still cheap properties. I think some people can't afford to buy them and hold them or renovate them.
So I pulled up data on that around the address. So one of the addresses is 22 or 2205 or 2250 Woodward.
Call me to buy it.
No, that's where some of the construction is gonna,
supposed
to happen at.
All right.
So
you got some properties around there?
I do.
Pulled up.
Yeah.
All right.
Within a mile of it.
Give us some addresses so people can call me to buy it.
Okay, 3764 17th, listed for $75,000. Obviously, these properties have to be renovated.
Right.
3053 Tillman.
How long has that first one been on there?
3053 Tillman?
Huh?
How much is 3053 Tillman?
That one's $80,000.
How long has it been on the market?
It's been on the market for 53 days. The first one has been on the market for 11 days. This fourth one at...
So let me bring this up. The people looking at these properties are probably not even looking at this article, and the people looking at this article are probably going out looking at those properties like, hey, do I get in now or do I wait? Because they've been on the market. Let me see if I can talk them down. So usually that's how it is. The average person looking at these properties are looking at them as an owner-occupant. Like, oh, I want to buy and stay over there.
Well, I'm tell you why people aren't looking at these properties. It's the area.
Yeah.
This is 96 and Martin Luther King. It's still fairly depressed. You take anybody over there and look at it, they're going to be like, oh, heck, I'm not moving there. I'm not buying there. I'm not putting my money there.
Yeah, but then there's people that know about this and is reading this article and like, yeah, I'll go spend 80 for the house and 50 or 60 in renovation, and I'm going to sit there and live there and wait it out.
Yeah, it's a risk because if you read all that article, this has been in the making for almost a decade and very little movement has occurred.
Right.
So, like you said, you got to have the money to be able to sit on it or be willing to do what you just suggested, go live in the hood for 10 years, with no change. You know what I'm saying? So who has the type of money to do that? And what family is going to do that? There's
a lot of them. Like if you ride through some of these areas that are, what you consider to be like midtown or nearby, you have families that are moving in with their young children and they're occupying the space, and there is change. In these areas, they're knocking down the houses that can be renovated. They're doing community gardens. They're doing projects. Then, you have seen progressive change over time. Cass Corridor has taken a major changing. Even if you go down by Little Caesars Arena, with everything that they're doing in the city, like all this stuff takes time. So for somebody to come in and say, oh, there's been very little change, that's not necessarily a true statement.
It's a fact. So if you read that article, it's a fact based on individuals that are in that area. So y'all gonna know a little bit better than me. So I can't argue with your knowledge of Cass Corridor in certain areas of Detroit. However, people that in that article there, one guy in particular who has been there and has been to all these meetings and has been waiting on this change is saying they've been saying all this stuff, but nothing's been happening. So, and he's in the mix. You know what I'm saying? So I would have to believe some of what it is he's saying. And we've seen it. Yeah, we've seen some. It doesn't take that long either. When they want to make it happen, when they want to when they push the go button, it goes. You see, how long did it take them to build Little Caesars Arena? That shit was done quick.
I think sometimes when you look at the media, sometimes I think they put stuff out there to get more people activated and start talking about it, and then that makes it happen.
Yeah, because I remember before Little Caesar Arena, any of the mogul bikes, any of the new businesses coming in, before any of that stuff, they were talking about it, and people were saying the same thing, like, oh, well, when?
Mm-hmm. Right.
And then, no one's paying attention to, well, not no one, but there are certain people who are not paying attention to the steady change.
So that's it. So here's the thing, right? Do you buy in the hood and live in the hood and wait based on speculation that it's going to change because of what you heard? Or do you buy in an area that you're more comfortable in and just live comfortable?
I think that's subjective. That's gonna be like personal preference. But from an investment standpoint,
no, I'm asking your opinion.
My opinion is everything that I do is based around like my kids.
Right.
So yeah, I have a little bit of post traumatic stress. So I'm not gonna take my little ones and stay in a certain type of depression.
Right.
But I will invest my money over there and hold the property and wait.
Okay, so for your primary, you're not going to do it, but for your investment, you will.
Right.
What about you?
Neither. I wouldn't do it for neither. We haven't been doing it for either. Like I've bought a few for dirt cheap that I'm holding, but for the majority of this last 3-4 years, we've been flipping houses. So that's kind of counter. It's different than what we're saying. You know, we won't. I don't see any of us buying in these areas, holding on to those houses. We're like a good portion of our income is from investing, right? And the majority of that portion of that investment has been from flipping, not buying and holding, right?
Right.
And why?
Not having enough capital to be able to hold.
Correct.
Right.
You know,
but we're talking about past with us specifically. So the reason why I brought this to the table in particular in the conversation is because of the desire to hold.
Right.
So desire to hold in a very specific area, and then, you know, investors basically saying, oh, no, you know, you shouldn't wait. I mean, you should wait to buy. Mm-hmm. Wait. And so my question becomes, well, wait for what? And then...
Exactly.
And then my other question becomes, well, I see the writing on the wall. So why wouldn't I, if I want to hold property, why wouldn't I go over here into this area that's next to everything that's been, you know, because I've seen a lot of change.
Right. Well, you just said why. The reason why we haven't, any of us. So have we bought any of the property down here near these areas and sat on it and held on it? But we've been knowing that for years. Like you've been talking about it for at least 5-6 years, and then
I currently have property under contract that I'm waiting to close on.
Yeah,
and so I'm getting pushback, and so I brought evidence to the data to the table to say, well, you know, I don't understand the pushback.
The pushback is, as an investor who may not have all that money, you may not be willing to take the risk. So I guess it's your risk tolerance.
Yeah,
you know what I'm saying.
The reason I asked the question is because I have investors that bought and hold out of speculation. They didn't have no facts, so like they brought in the area. Oh, this area is gonna come up, and this is usually out of towners, right? So this area gonna come up. I'm gonna buy and hold it. I can buy it dirt cheap in 10 years from later. So here's the reality. This is why it frustrates me. People don't understand numbers and math, right? They understand emotion. So let's say you buy a property, it's $20,000, right? And you hold that property for 10 years. Let's say 10 years. You bought it $20,000. You held it for 10 years. You pay taxes on it every year, $1,500 a year. You probably had to put $40,000 into it. And some people, they don't even rent these properties. They literally buy them and hold them when we say burn. So there's no income being generated. But let's just say you do get some income. So you're getting, you know, $650, $700 a month, because that's all the area would bear, right? So you brought and hold it. You got 60 in it. You're making some income. It's kind of paid for itself the time you rented the property. Now all of a sudden, the area is turning and the property is worth, you had 60 into it and the property is worth 180, right? 10 years later. Did you make money? Yes. But could you have made a lot more money with that $60,000 in a 10-year period?
For sure.
You see what I'm saying? So some people are so fascinated with, I bought it at this price and 10 years later it's worth this. Yeah, what was your true opportunity cost, right? You could have made probably 10 times that buying in another area with that same amount of investment or even a little bit more and got the same result. But people be so like gung-ho about, I'm doing this, or I'm bringing the area back, or I was the first one to start buying over there. And now, okay, you made $120,000 plus the rents you collected. But in the meantime, Joe Small over here that made over $1 million with his initial $60,000 investment because he brought where the areas were already hot, right? Now he could take his $1 million and go over here and buy the same properties. He's paying more for them, but he's still benefiting from that area's improvement, right? So people don't really look at numbers. They be speculating, and then they are caught up in the emotion of, I'm getting in early, or I'm buying an emerging area.
That's what those articles are for, though.
Exactly.
That's what I'm saying. That's what that article will do to you. You will see that 1.5 billion development and imagine that that's going to happen.
Right.
But they're billionaires. I don't want to say they're purposely suppressing the area, but sometimes they buy it and they have the ability to, just like you just said, sit on it for 10 years and do nothing. And you bought thinking that something was going to happen based off of this news article, and it didn't happen.
So when you buy in this area like this, you have to buy for one, you buying it for what it is right now, and it's a good investment, whether this happens or not. Mm-hmm. There's no guarantee this is going to happen. The economy can change, and they scrap all of this, right? Which they've done already. Yeah, is your property a good sound investment? If so, buy it. Yeah. Right? But this does help, because if this comes about, you're going to see huge returns on that. And we've seen areas in Detroit where, okay, normally it would appreciate 5 or 10%, but it quadrupled in value. You know what I'm saying? So that does happen. But I'm saying on the grand scheme of things, you got to look at your initial investment and how long is it going to take for this to actually come and be a factor to where it's even going to matter. I wish I would have brought some of them properties down by Little Caesars Arena, right? And held them and still had them. But I would have only brought them if they made sense at that time, not speculating on what's going to come.
Right. So anything that I'm talking about is always going to make sense at the time. And so my question is, what about the person who's using other people's money? Right. They decide to use a burst strategy, that investor that put their money into with the other person's money, and they're getting their money back plus their return within 12 months' time.
But see, that's a
good risk. Yeah,
but it's still a good investment for right then at that moment, and it has nothing to do with this proposed development.
Exactly. The proposed development is just an argument of why buy and hold in the area.
Right.
And the proposed development is not, it's more so to back up what has already taken place. I'm not talking about whatever happened here in Scrap. I'm talking about what you can see that is tangible that has already changed.
So here's what I recommend investors do, right? If you're going to buy in an area and you're speculating and you think some things are going to change, one, is it a good investment for right now? Do the numbers make sense right now? Where can I cash flow this property at if I'm buying and holding? And can I just not go underwater and still make a decent profit, right? And under normal circumstances, will this property continue to appreciate in value, or most likely appreciate in value, right? But then if you're considering buying in that area because there's some proposed development or potential development, don't rely on just the media. Go look at the planning and development department and see what permits are being pulled. See what other major properties have been acquired. Did somebody buy a large bulk of land or a large number of parcels in the area recently? That's how you start getting into the details. Don't rely on just the media just threw out some clickbait, and now you're going and making major decisions based on that.
So, but Janita, what you're saying, so she's asking from the lender's perspective,
right?
So lenders go off of they do go off of right now. They don't go off of they don't project, right? So from a lender's perspective, they're seeing that the market is halted, slowing down, right? And they're seeing in their mind that prices are decreasing, even if they're not, even if it was because somebody was over. They were listed too high anyway. It don't matter. They don't care. They see that prices are decreasing,
right?
And that's what they're basing it on. So now, every lender during this period, their risk tolerance, they tightened up. You know what I'm saying?
Lenders are always short-sighted, and they're looking at risk.
Correct.
That's all it is.
Yes.
They're short-sighted when they loan the money, but they're long-sighted when they're getting paid back because they want the 30-year and all of that. But that's all it is. So when you invest like a lender with loan, you're looking at the right now because you got to minimize your risk.
Absolutely.
But a lot of times a lender will lose out, but they're not in it for what
the risk. Like
so the lender, if you borrow $80,000 for a lender, and from a lender, and they get their $80,000 back with interest, that's all they care about. They don't care the property's going to be worth $400,000 in 5 years.
I guess that's the point, though. If
Because
you
they're
can
not
show
your
current data to your lender that supports the numbers, what's the problem? So, because now the lender is starting to talk about the projections in the future.
Right.
So it's a contradictory.
No, but they're going off of what's happening. So they're still going off of what's happening in the current market. So he's not. So I mean, we could talk. Can we talk openly about this one?
You just go borrow less from your lender and put more of your money.
There it is
in the game because you believe
you want to take the risk.
Yeah, you're willing. The lender want less of the risk for that property because of their projections and what they see. And you just put more of your own skin in the game because from your knowledge, you know that something's going to happen. The lender don't care if it's going to be worth $400,000.
You just said it.
Or maybe it's already worth $400,000, and for whatever reason, the lenders can't see this just sold 2 weeks ago, and it closed at $400,000.
That's why they're lenders and not investment partners.
Correct.
Right?
That's true.
Yeah.
I get it, but it's just still a conversation because I'm pretty sure I'm not the only investor asking myself, well, this person is telling me, and at some point, everybody has to trust their own brain power, right? And what they understand about their profession. Right. And the thing that they say makes them money. Right. So you have to be able to stand on your expertise. Right. And that's what I'm. And so my question becomes, well, do I start, being scared because you're scared? Right. Do I stop making a living because you're scared? No. Because at the end of the day, this person over here, they may be able to make their living. But then if I stop, then how the hell I'm gonna feed my family?
Well, he just told you. But no, you don't stop. You just invest more of your money into the situation. Mm-hmm. Yeah, you
go get partners instead of lenders. That's just the bottom line. Your partners, you find partners that think the way you think and that understand the vision. Your lenders are only in it for whatever it's worth now. Your partners understand the vision of where it's going.
It's just like any lender. Remember, they had 580 requirements, then they increased them to 620 or 640. Yeah, it's the same thing. You know what I mean? They were projecting something that didn't happen yet, but they're projecting that certain things are going to happen. So they're being more strict now.
Mm-hmm. All right, we should evaluate some of these properties on Deal or No Deal Sundays, 9:30.
Yeah, we definitely should do that. So y'all can watch us live, evaluate properties, so real time, real properties on the market. Actually, we're going to look at one today in Garden City.
See, me and Johnita really argue.
Yeah, y'all argue. Yeah, y'all argue off camera, on
See
camera.
Me set them on fire.
Y'all have no filter for y'all arguments.
All right, that is a wrap. Follow, like, subscribe. Thanks.